Yep, I just sold. What's up, guys? In this video, we're going to be talking about what I just sold today, the stocks that I sold, why I sold. We're going to be going over the markets. We're going to be going over what happened today, why the markets were down today after being up and up and up, seeming like forever since April. We've just been consistently running higher and higher in the markets. I'm sure your portfolios are really green, just like my portfolios are really green. And yeah, in this video, we're gonna go over a couple things. We're gonna go over our performance this month. We're gonna go over how much all the selling and how much gains we locked in today, how much realized gains we locked in today in the portfolio. We're going to go over our 5-year performance compared to the S&P 500 benchmark. We're going to talk a little bit about what Fed Powell said, and we're going to talk about where I see these markets going and how I'm reacting and positioning myself and how we are positioning ourselves in the High Five Collective moving forward so we can be ready if there is a pullback or correction. So without further ado, guys, let's get into this thing. We can see that, yes, today, Fed Chair Powell spoke live on interest rates and the economy. Basically, it can all be summed up in this. In his post meeting news conference, Powell characterized the reduction as risk management as officials become more concerned with weakness in the labor market than the threat from inflation. Meeting participants indicated a likelihood of 2 more cuts this year, followed by additional reductions in the next 2 years. This is massive. This is kind of just laying out the land, saying that, yeah, we're going to see continuous cuts going forward. 2 more cuts this year, getting us down to 4% interest rates and continuing into 2026 and 2027. This is big. This is big. But the thing we have to realize is that the markets have ran a lot since April lows. They're well off their April lows, not just for the QQQ and the SPY, but now also for the IWM, which is the Russell 2000. All of these are massively off their lows. So we just have to take that into consideration and understand that things have been running very, very hard. And we're going into the time of year where historically there have been pullbacks. And yeah, we're just gonna have to see how it plays out. I don't like to predict anything. I just kind of like to look at all the factors and just kind of understand things and make moves based on how things are looking and just by reacting to the markets. So that's what Fed Powell said today. That's why the markets were down around a little less than a percent, right? So we were down like 0.60 some percent in the Nasdaq. We were down 0.50 some percent in the SP 500, and we were down 0.20% in the IWM. And we were actually up. We were actually up uh, pretty handily, about half a percent, almost a 1% in the Russell 2000 today before, kind of out of nowhere, not really out of nowhere, just basically once Fed Chair Powell started speaking, the market started coming down and down and down and down. It's seems how it always happens, right? The Fed gets out there, starts talking, and then next thing you know, we're going down and down and down. So yeah, we'll just have to see how that plays out. But yeah, guys. So getting in here real quick, wanted to talk about where we're at with our gains. So this month in our trading portfolio, and we'll get into what I sold today out of here in a little bit. This month, we have been having a massive, massive month in the High Five Collective. As you can see on the chart, we're up 29.28%, 1 month cumulative. And compared to the S&P 500, Dow Jones being up, 3.63%, 3.65%. So I was telling the collective this today when I was taking these gains off the table, because just because we were down a little bit in the market doesn't mean like, oh my gosh, panic, sell, sell, sell. I see red, I need to sell. That's not what this is. I was telling the High Five Collective this today. I was simply saying, if I was to tell you you can make 29% in a month on your money, And then at the end of that, almost at the end of that month, I told you, okay, you have to sell now, right? Or if I just told you that you would make 29% before the month started, I said, okay, hey, in October, you're going to make 29%, but only if you sell at the end. You would say, okay, yeah, of course, Ronnie. Of course, I'm going to sell at the end of the month and lock in that 29%. If your job said, hey, guess what, Johnny? We're going to give you a 29% raise in October. How does that sound? That sounds great, boss. The only thing is you have to realize your gains. You have to realize your profits, meaning you have to actually receive the money, right? You have to actually receive the money. Of course, you're going to say, of course. Of course I'm going to do that. And going into our next point, through all the selling today, this is how much we made. Now, this isn't a flex. This isn't a look at me moment. This is simply, I'm going to paint a picture here. We're going to paint a pretty picture. We're going to talk about this before we get into the stocks that I sold out of, before we get into my market overview and what I'm seeing and where I think things are going. So, as you can see, this was date. I took this screenshot today at 3:08 with our trimming today. And we didn't sell out everything, by the way, just trimming. We were able to lock in $28,632.29 in gains. That is locked in, ready to go. I can pull this money out of my brokerage with Fidelity right here, right now, if I wanted to. Now, let's paint some more of the picture. If you, if I told you I will give you $28,632.29 today, or let's say tomorrow, I'll give you this money tomorrow, but you cannot trade. You have to realize your gains and you cannot trade tomorrow. Would you take it? Drop a comment. Would you take it? While you're dropping a comment, leave a like if you like these types of videos where I drop this knowledge on you about the markets and just about how to be a profitable trader, how to be a profitable investor. I think the picture I'm going to paint today is going to be good for no matter what you are, a trader, investor, an alien, it doesn't matter. Okay. So if I were to come up to you and say, I'll give you $28,632.29 right now, you just can't trade today, well, or invest today. What would you do? You would take the money and say, okay, Ronnie, thank you. Thanks for the money. That's amazing. This is great. This is gonna pay my bills. This is gonna XYZ. What if your work gave you a bonus of $28,632.29? And they just said, okay, but you just have to keep working. Okay. That okay, yeah, let's do that. The picture I'm painting here, guys, is in trading or investing, we sometimes forget that this is real money. It's real money. It's real money. It's just on a screen in a brokerage in a bank somewhere that we can't see. We can't physically touch it. And we need to step back. We need to humble ourselves and we need to realize that trying to get rich quick will lead to us getting poor fast. Okay. If you have almost 30% gains in 1 month, which the benchmark of the S&P 500 is 8 to 10% average per year. So you did that and you tripled that in 1 month. Why are we not going to trim? Why are we not going to take gains off the table? You see what I'm getting at here? Because because the stocks could go higher, because the positions that we were in today could go higher, because we could miss out. Miss out? We we made almost $30,000 in a day. We made almost 30% in 1 month. You have to shift your mind away from but it can go so much higher. Well, it can also go so much lower, friends. It goes in both ways. It goes in both ways. So trading or investing and earning those gains is half the battle. You still have to realize those gains. And yes, you have to pay taxes on those gains, which sucks. Yes, indeed. But you have to realize the gains if you want the gains. Now, I will say this is more for trading. Okay. With long term investing, I would always tell you, and I will always tell myself, I want to be in it for the long term. I want to be invested for the long term. Um, and when I trim, it's just trimming a little bit because I want to be in those positions for 2, 5, 10 years or more from now. And I definitely want 1 year time in those names because I want that tax benefit of on capital gains tax for the long-term capital gains tax instead of the short-term capital gains tax because it's much less I have to pay to the government. But again, it really it's for both because even though you still need to trim in investing, you still need to realize your gains, okay? Now, for this today, and I'm going to get into what I sold here in a minute. I'm going to get into why I sold and trimmed a lot of my positions. But what I just told you is mainly the meat and potatoes of what you need to understand. And to simplify it all in one sentence, it's be humble, take a step back and see where you're at and say, how long would it take me to make $28,000, or if it was a couple $1,000, or if it was a couple $100? How long would it take me to make that running a 9 to 5? How many hours would I have to work? How many weeks? How many months? How many years would I have to work to get that money? Most of you have a full-time job. Most of you have a full-time job and you provide for your family in that way. And your traders and your investors, and it's your side gig, it's your side hustle. Well, if that's truly the case, then even more so than anybody else, very important you realize your gains and you trim, because if you don't, you could lose all your gains or sell lower or hold on way too long and say it's going to go back up, 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 and it just keeps falling and falling and falling. And then next thing you know, I had 100 and some percent gain. Now I have a 50% loss. It can happen quick. I'm not trying to scare you. I'm not trying to say the market's going to crash. I don't believe that. I'm just really trying to hit home that fact of take a step back sometimes, ground yourself sometimes, humble yourself, and realize that these are just paper gains until you hit that sell button. Okay? It could also be paper losses until you hit that sell button, which is a nice thing if you really believe in a company for the long term. But again, 30% gains in a month compared to 3 point some for the SP 500, $28,000 in a day. We're up over 40 or 50,000 for the month. Some people like frown upon gains because they sit there and they say, "Oh, well, it can go higher. You're not at the profit target yet. What are we doing?" Well, let's be real. Live in the real world for a minute. The real world says that anything can happen at any time. If anything can happen at any time, that means those gains that you work so hard to get up front by getting in really good trades or really good investments, they can go poof just like that. Okay. I really wanted to hit that home with you guys. It's okay to take gains. Okay to get your realized gains out. Okay to trim. One more thing I wanted to show you guys. Um, right here. So again, not a flex, but I'm not going to also not show this because I've done very well for myself in the markets. So call it a flex, hate on me, whatever. I've done very, very well in this market. Um, not year to date, not for the past just 1 month, not just for the past year, but for the last 5 years. For the last 5 years, I've been able to amass a 300 and almost 13% cumulative pre-tax return. Basically, almost 60 some percent per year annual compounding annual growth rate. Almost 60 some percent. Compared to the S&P 500, the benchmark's 117% in that time. Almost a 3x of what the benchmark and the market's doing, right? Again, whatever. I'll call it what it is. It's a slight flex. I'm sorry. It's a slight flex. But I'm not trying to belittle you or make you feel bad or anything. I'm just trying to show you what I'm teaching, what we're teaching in the High Five Collective with trading and investing. If I had one page to show you, hey, this is why you should join. This is why you should put a little faith in me. It would be this, and it would also be the amazing comments that my members leave me. My members in the High Five Collective are so amazing. They leave me such amazing reviews. This is the High Five, or sorry, this is the Trading Made Simple. This is the trading tier. We have two WAPs. We have an investing WAP in Discord, and we have a trading WAP in Discord. The difference, the investing WAP in Discord is strictly for long-term investing. We're talking about high five gems. We're talking about undervalued stocks. We're talking about, I'm showing my snapshots. I'm showing my levels. You get access to my master Excel sheet with over 300 stocks and their valuations, their margin of safeties, all of that, and my courses. The trading side of things is either my trade alerts for the first tier, or the second tier is going to be my trade alerts and all my courses, how to run my strategies, my indicators, so on and so forth. So if you want to join, the links are in my bio. If you want to join the investing high five, investing course, or high five investing. Gosh, I'm blanking so hard. It's been a long day. High Five Collective. If you want to join that on the investing side, so you can do a 5-day free trial right here, $49.99 a month. And like I was saying, the reviews, guys, I got 5 stars out of 14, and we just opened this up. You will not find someone with more passion than RonnieV. I believe he is getting started and help people get very wealthy. The minimal monthly cost is extremely low for the amount Ronnie gives, and he could easily charge so much more. I joined the High Five Collective a little over 2 months ago after following Ronnie's trades on X and TradingView for several months, and it's been a massive game changer. The platform is very well organized, and Ronnie is quick to respond to messages. Thanks to this group, I've been able to I've had multiple trades go my way. I'm guessing with 50% or more in gains. Just made a bunch of amazing reviews, guys. Truly blessed to have these amazing collective members. Truly blessed. They are truly amazing. Here we have 4.98. That's because I got one 4-star review. It's all good. I think it was an accident, but with WAP, how they've been doing stuff. Yeah, we have our trade alerts. We have trading bots. We have indicators. We got it all, guys. So if you want to join that, I'll kind of move on from that. If you want to join, you can go on over to my links in the bio, and you can join that. We are doing very, very well. Like I said, this is our trade alerts channel. You can see all my trades. We also have trade breakdowns. You can go in here, and it's very nice in the forum. And you can go in here and you can just see all my different trades that I'm in, what tier they're in. We do tier 1, tier 2, tier 3 trades, just different allocations. We do 80% shares, 20% options for each trade. We are very risk adverse. We are very ready for big movers. We don't need to go all in big movers in hit or miss big. We can keep it small with big movers. And yeah, we've been doing very, very well. Very, very well, as you're about to see. So the stocks that I actually exited today, we'll just kind of go through it and we can run through the gains as well. So first, we have BITF. BITF is a digital. It's a crypto miner that also they're working on basically becoming a data center as well. It really doesn't matter what they do. Let's. This isn't investing. This is trading. These are our trades. BitF, we sold completely out of these options for 258% gain, $389, and we already trimmed a ton before this as well. EOSE, we sold out of this one for 223%, $953 in gains. Baidu, $2,200 in gains, sold 196%. Wolf, 118%. We're still in that one actually, up $1,800. On to $115 call, sold out of 100% of that. Gain 1,600. NU, we sold almost 100%, $1,334. And mind you guys, all of these trades, 200%, 100%, 90, 80, 70%. These are all trades that we're taking this month. These aren't trades from like months ago. These are all trades taken this month. Um, On to NU, BitF, the shares. Like I said, we go 80% shares, 20% options. CLS calls, Riot, Apple. Sold out of all these for big gains, 70 some percent gains. Trimmed some RR, trimmed some serve, or exited serve at 71% on the options. We also trimmed out of half our BitF shares, trimmed out of half our RR shares, trimmed out of our Tesla 2x leveraged ETF shares, half of EOSE, SLNH, which we got 47% on that one. You guys can see it. I don't need to name every single one of these, but we trimmed out of all of these, exit out of CLF calls. Yeah, 30% gain, 20% gain, 28% gain, 22% gain. Just trimmed half of all these, trimmed 1/3 of ASML. What else? What else? We went through and we trimmed up out of half of these. We kept our UNH calls. We exited fully out of all of these besides UNH and JD. We exited out of all of these because I basically said if it's under 10% gain or if it's a losing position, I'm just going to fully exit. So we fully exit out of all of these for 8, 5, 4, 3, 2, 1, negative 0.38, negative 1%. And then also negative 1.48, negative 2, negative 6. And our biggest loser was negative 33% with Wolf. But it's funny because our biggest loser was Wolf, and we lost a total of $505 because we had a very, very small position in that. Actually, it was $102 that we lost. Nope, it was $505 that we lost. Yep. So exit all those. We did exit Oscar. Don't freak out. These Oscar shares are simply only in my trading portfolio. This is my trading portfolio. These shares are only my Oscar trading portfolio shares. I still have all my other Oscar shares. I didn't sell out of Oscar. Don't worry. Don't freak out. It's simply just my trading shares only. I still have all my other positions. So sold out of that for a small loss. Again, just because I think I can probably get back into it lower, and that's fine when you're trading, not when you're investing. I don't sell in and out of my long-term investments. But when you're trading and you're kind of getting a little worried about the markets, seeing some things, then yeah, you exit. So these are our losses. These are all our losses. Very, very small, probably a total of 2,500, maybe $3,000 in losses. And like I said, we made 28,000 today doing all these trims. And you see, these are just half position trims. So we're still in a bunch of these, still in these. So we've done really, really well. And this is the Discord. If you're wondering, all these trades that we're in, I give breakdowns of each one. I give the full breakdown of what we're doing, where we're at, initial position, initial position. I give the full breakdown. I give the chart. I give a lot of information, guys. A lot of information, a lot of data, and I also give just the straight up. I give just a straight up uh buy or sell as well. So we got it all. We got our bot alerts down here. Got our bots going off all the time, giving us good opportunities. But that brings me to, you know, why did the market, you know, pop down a little bit today, 0.66, 0.54, and 0.23? Well, the Fed talked today, like we talked about, and he kind of just, opened his mouth and the markets kind of bled a little bit off from that. But you're asking yourself, we come to this part of the video where I finally give you, why did you trim so much? Because we went from, 300 and some $1,000 trading portfolio, and we trimmed enough to where we're now like half cash. We're half cash in that trading portfolio. And why did you trim so much? I had collective members ask me that. And it's very simple. It's very simple. I have a very simple strategy for reacting to markets and when to keep riding, when to take some hedges and de-risk, and then when to fully exit and say I'm out. For trading, again, for trading. For investing, once I start seeing these signs, I'll probably raise more cash, but I'm going to stick with my investments. And yeah. So real quick to give you the layout, this is the 2-hour chart. This is the 2-hour Williams percentage range. It's a momentum indicator. This is the daily Williams percentage range, and this is the weekly Williams percentage range. If you've caught some of my previous videos, if you've caught my previous live streams, I go over this strategy. I go over this. I go over, basically what I'm about to talk about here. But what you need to know is these boxes here, these boxes, when we're up here, tell us that we're going to continue higher. We're going to continue higher. We're going to continue higher. This red barrier is kind of you can't break through that. In your green barrier, you can't break below that. And like a pendulum, you will swing back and forth between the two, green and red. Red barrier and green barrier, you'll swing like a pendulum between the two. So on a 2-hour, you're going to swing more often. On a daily, you'll swing less often. On a weekly, you'll swing even less often, right? To fully simplify this down, a bullish Williams consolidation box, which is simply just above -50, that's bullish. Below -50 is bearish. Okay. Above is bullish, below is bearish. All right. I think we got the layout of the land now. We broke out of the 2-hour, and now the pendulum is swinging from red to green. We're not down at green yet. I think, we could continue down to here, and then we could base out down here and build a box down here and stay down here for a little bit. When this happens on the 2-hour, you typically get, and I've done my research, I've looked at this, I've studied this is my strategy. You typically get a 1 to 3% pullback. And, this would be the Q, the NASDAQ. So we're looking at, let's go to 3%. We're looking at basically 585 from 603 down to 585, 3% pullback, right? If we move on over here, and this is the real reason I sold, because you went up, you created your base here. This is your base of your box. You created your box, you stayed in it, and now today, it is ever so slight. I get it. It is ever so slight, but you can see it if we zoom in. We broke down out of the Williams consolidation box right there. You can see it. We broke down out of the Williams consolidation box. Not just did we break down, but you gotta kind of understand that, hey, if this is here and we still have all this room to fall, that's gonna carry this down. Okay. So the reason I sold out of a lot of positions today and trimmed a lot is because the daily broke down out of the Williams consolidation box. And when you break out of the Williams consolidation box, like I said, you are going to pendulum swing from red to green. And then when you break up out of the bearish one, like here, you're going to swing green to red. And that's bullish. Green to red is bullish. Red to green is bearish. Going down is going down is bearish. Going up is bullish. Very simple. So sitting here today, I told the community, yep, I might take some QQQ puts. If we do close out of it, which I did. I didn't take like a ton. I took like $2,000 worth for a 300 and some $1,000 trading portfolio. And I did it very simply because I want to hedge up against all those other positions that I still have on. Where if the market really does dump tomorrow and I have to dump out of my other positions or something, I can do that. But I can still make gains on the way down. Okay. So I just told you 1 to 3% for a 2-hour breakdown of the box. Now, for a breakdown of a daily box, you're looking at 3 to 5% total pullback. So we are now looking at, right, 3% here. So let's just mark this as 585 down to the anchor volume profile, right? Basically the other anchor volume profile from way back in June. We're looking at 5%, which is 572. Okay. Just think of the market. It's been up and up and up and up and up since April. Look at this. Look at this. Okay. Look at this. We go April of $400 down here, and we've been up and up and up. So we went from 400 all the way up to almost 610 without any big pullbacks, right? And again, I'm not saying we're going to crash. I'm just saying a healthy pullback. A pullback would be healthy here. So 1 to 3% with the 2-hour, 3 to 5% with the daily breaking down because it'll take it down here to the green barrier. And then eventually we'll swing back up to the red barrier and that'll be bullish. And as a trader, that's what I want. I want to avoid this. And then I want to catch this right there. I want to catch this swinging up. Really want to catch this swinging up because this is the weekly. The weekly, now this is the one that trumps all. This trumps them all, okay? When we get a weekly breakdown of the box, you better watch out because a weekly breakdown of the box is 5% or more. 5% or more. And I'll just jump over here. This was a breakdown of that box back in December, the end of the year of last year. We broke down out of the box. We stayed right here in this consolidation area. This right here would have signaled to me, and it did, get out of everything, get out of all my trades, raise up to 15 to 30% of cash. But if I'm seeing this, I want 30% of cash for sure. I want 30% of cash to be ready for this big fat 25% down. What happened? We went down, we snapped back. This was a whole fake out. And you can see that we just kind of, double topped here basically. And then we just got destroyed from Tariff Geddon. So it's happened here. It's happened here. It's happened here. If you follow, it's funny, in the collective, we have a saying. So this is the Williams percentage range. The Williams consolidation box is my personal strategy that I've created with the Williams percentage range. Just something very simple, but it works. But we have this saying, in Willie we trust. We call this the Willie. The Willie. This is the Willie. Just to simplify it, instead of saying Williams percentage range, W percent R, it's just much simpler to say Willie. So we always say, in the Willie we trust. And it's true. On the weekly, when we break out, you have very bad times. Very bad times when you break out of this Williams consolidation box and you flow down, you have very, very bad times. We're talking April 2024. We're talking about July 2024. So we're talking DeepSeek. We're talking Japanese carry trade. And then we're talking Tariff Geddon. Those are very bad times. Very bad times. Great times to be buying stocks for sure on the way down, but very bad times if you're heavily invested or heavily trading stocks, okay? And for this video, we're really talking about heavily trading stocks. And so we're not there yet, and that's why I'm not exiting my positions. But let's just say, we've been in this for a little bit now. Let's just say we do come down here. If we were to break and close underneath this box, I would exit out of the rest of all those other trades. I would, without hesitation, because time and 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 time again and time again and time again and time again. What do you see? Up and down like a pendulum swinging back and forth, and it's going to happen. It's just going to keep happening back and forth. And really, you want to buy down here and you want to be trimming and selling up here. It really is that easy. It really can be that easy, guys. So, yeah, I'm not fully exiting everything because we don't have that. But we do have this. We are out of it, right? So we do have this. My mama's calling me. She wants to talk to my babies. She wants to talk to my kiddos. Yeah, so we do have this. So again, it could be a little fake out because it's like it's out of the box, but it's barely out of the box. But this looks like it's going to continue to fall. But guess what? I don't care if it's slightly or fully. It's out of the box. This tells us 1 to 3%. That takes us down to possibly 585 or 585 to 572 with this breakdown. If we do see continuation down here, so knowing that we are so hot in the market, right? Knowing that we are so hot in the market, we have been running like crazy. We've made immense gains over the last month. We've made immense gains since April. Why am I not going to take my gains off the table? At least most of them, or some of them, or basically, in this case, half of them. In the options, I'm way more quick to fully cut them out because options, you can make a lot of money very quick and you can lose all that money very quick. You can get back all your gains very quick, or you can lose on those positions very quick if the market really does tank hard, especially with small caps that we have been invested trading a lot of because rate cuts and small caps are doing very well. So yeah, guys, if you're interested in what I was talking about there, I don't predict markets. I don't say I predict markets. I don't have a crystal ball. I don't say this is what's going to happen. I simply react. I react to what really Willie is telling me in my strategies, including my indicators, what they're telling me and what just my 10 years of experience in the market of trading and investing. And as you saw, doing 300 and some percent over the last 5 years and crushing the benchmark SP 500, I trust myself because I have confidence in my strategies and in my worth as a trader and an investor because I've proven it. And everybody in my collective can tell you, like like we were reading in the reviews, I care. I care. I want you to thrive. I want you to not take as long as I did to become a profitable trader or to be a good investor. I want to streamline, make things easier for you. Yes, that comes at a cost, but what doesn't come at a cost these days? You want to get better in the gym, you hire a coach. If you want to eat better, you hire a nutritionist. If you want to swim better, you hire a swimming coach. If you want to become a cyclist, you hire a cyclist. You know, if you want to work on your mental health, you hire a psychiatrist. That's the way of the world, guys. You know, we all have families, we all have, mouths to feed. Um, I feel that what I charge compared to what I actually offer and what we're offering in the collective is peanuts, honestly. I work my butt off. I work my butt off for the collective, the community. I work my butt off to find great trades, find great gems, find amazing investments, and to make everybody a ton of money. So that interests you, these strategies interest you, You want to stop gambling. You want to stop, you know, listening to all this junk of, oh, freaking gonna go to $1 billion. You just full port, dude, full port. Like on Reddit and stuff, Wall Street bets, people blowing up their accounts. Over this time, the market's done okay the last month. We've done 30%. There's people that haven't made any money or lost money still because it's not everything. Not everything's flying off the handle. It's some things. So if that interests you, yeah, the link's gonna be in my bio, and I'll put it in the first comment below as well. If you want to come in investing, we focus on long term. If you want to come into trading, we focus on trading. If you want to be ambidextrous like me and you left brain investing and right brain trading, well, you can do that too. But yeah, if you made it to the end of the video, guys, I appreciate it. I do. I appreciate you sitting here and watching my videos, but at the same time, I felt like I put out a lot of content. I felt like, my videos are jam-packed with lessons, life lessons, trading and investing lessons, and you can learn a lot from it. So I hope that more so that you learned a lot from this video, and I love you all. And yeah, I'll catch you guys in the next one. Hit that like, hit that subscribe.